Hello and welcome back to another episode of the 100 Days series. Now, I know the last video that I analyzed was on the 17th of February. Since then, I've not posted any other video. So, in this session, we will go over an update for the analysis for HAVELLS and KPIT that we did earlier. And then I have a list of new stocks that I want to discuss with you. To be precise, 8 new stocks. We'll see how many we are able to accomplish today. So let's get started. I will open the correct layout for this because a lot of you have been requesting that I use white screens. I've created a new layout which has a white background. Now, I don't want to work with the 3-minute time frame or the 5-minute time frame. So let me, okay, so I want to change this to a 4-minute layout, a 4-screen layout. So what I'll do is I'm going to move this template forward and forward, because when I change this into a 4-screen layout, right, only these 4 screens will be retained and the 2 on the rightmost side will be pushed out. So exactly like that. So now that we have the 4 desired time frames on screen, we will get started. Now, before I start with the analysis of the stocks, I want to tell you about how I will tell you about how I came around shortlisting these 8 stocks. I will give you a brief on that process. In some other video, I will take you through the process itself. But since I've already gone through it, I don't want to get into a lot of details there. Right. So today, let's first start with the discussion on HAVELLS. So HAVELLS, we saw whatever analysis we had done, the stop loss got triggered. That's not the point, right? The point is to assess what did we overlook because of which our stop loss got triggered, because now hindsight analysis is going to be easier for us, right? And also we will work with writing more notes on the chart so that hindsight analysis becomes better, or past trade analysis becomes better. So market was clearly very, very bearish, and the reason why I had conviction in HAVELLS was because of the positive divergence. Now, what I'm seeing over here was that this positive divergence was a legitimate divergence. However, this divergence, when the price started to go up, it got resisted. It found resistance at this green line and this blue line. This green line is the 100 EMA and the blue line is the 250 EMA. Before that, let's just go back and look at the date on which we did the analysis. So it was 28th of January, right? So let's mark that on the chart, 28th of January, that is here. Okay, this is where we did the analysis. The analysis immediately after that, it did go up, but you can see these EMAs have acted as resistance. Now, what I've learned lately, and I also came across this same observation in a book that I'm reading, when there is a major EMA and it is trending downward, it's very likely it is going to act as a resistance to your price action. That is why in a lot of strategies, you will see it is advised to make your position after the EMA has been crossed. So EMAs will act as key supports and resistances. Right, so here the 100 and 250 EMA converged. The blue line is the 250 EMA and they both acted as resistance. Now when the price went back down, you will see that a new low has been forged, which essentially triggered our stop loss here on the 17th of February, correct? But if you notice, the current low and the previous low, between those two lows, again a positive divergence has been forged, and in fact this positive divergence looks more convincing than the previous positive divergence. Why am I saying that? Because over here the RSI is way above the level of 30, still not above the level of 40, but still way above the level of 30. So instead of going ahead and creating a position right away, what we are going to do is we will change this alert that we had set to this price. So basically, if the price goes above here, or let's make it here, we want the price to go above the resistance of this high, this high, this price activity, and the 3 key EMAs that we have plotted. 20 EMA is not going to be a big deal. Over here also 20 EMA acted as resistance, but that's beside the point. We want to see the 100 EMA and the 250 EMA get crossed over and the price trend to become bullish. So while Havells from a long-term perspective continues to look very bullish. So why do I say that? Because there was a negative divergence on the weekly time frame. Still, the price activity was significant and very comfortable above the level of 60. So the long-term trend continues to remain bullish. However, the short-term trend has definitely turned bearish on Havells. So if you see the last time also here also when the price activity was very strong, between this peak and this peak. So between this peak and this peak, there was a negative divergence. The price activity turned negative. It went into correction, but then the rally continued. So similarly, this was a time frame of if you'd bought the stock here 22, it was a good investment till 24. So 2.5 years almost from February of 22 to September of 24. 2.5 years. So long term, it was good, right? So here also, I expect that if you do purchase it here from a long term perspective, it will be a good investment. But since the objective of this video series is not long term investment, it is short term swing trading, we will not act on this stock recommendation for the time being. In fact, we will wait for better price activity to unfold here. So stop loss is triggered. So we are going to remove this and we will capture our, so we do not take this trade. There was no trade taken in this, but I do want to capture my updated comments. Actually, I will do it on the chart itself. Actually, I don't want to waste any more time behind this because we've already discussed it. Now, KPIT. So KPIT also triggered the stop loss, which in a very bearish and volatile market like the one that we are seeing with the tariff war and everything is not very super surprising. But there is a lot of insights on the chart. So let's work on withdrawing those insights. So we'll again look at the weekly time frame. So the weekly time frame here is showing a very strong uptrend. Now, obviously, the first uptrend was stronger than the second uptrend, as we can see there was a divergence over here. However, this divergence still I wouldn't call it a very weak divergence. This divergence was a weak divergence. Or a rather strong negative divergence. This indicated upcoming price weakness in KPIT. Okay, so KPIT has started declining since that negative divergence on the weekly time frame. Now we come to the daily time frame. On the daily time frame, the strong positive range on the price was maintained from June 20 up to October 24. But you can see over here the price kind of maintains similar high levels, but there was a strong negative divergence noted. Why am I calling this a strong negative divergence? Because the right hand side of the divergence touched at 60 and ended there. So that makes it a strong negative divergence, right? The price decline that ensued, it broke below the most recent support level here. Now going back to KPIT 17th of February. Okay, so 17th of February, let's take the price and 17th of. So this is where we analyzed it. On this day is where we analyzed KPIT. Now I expected ki this support level, when this support level comes, it will become a good price level. That's why the orange line is there. So that price level came, but very soon it triggered the stop loss because it continued to decline. So again, the mistake that I made was premature entry here. Why would I call it a mistake? Because clearly if you look at the EMAs, same thing, are declining downwards. And here also I should have taken note that the EMAs had acted as resistance, so a new low should have been expected. So instead of keeping the immediate low as my entry point, first of all, I should have waited for a higher high here. And second of all, if I did have to make an entry, I should have looked for the next best support level. So if this was the immediate support level that I took entry at, I might have kept this as the probable entry point, because this is a major support level because of these three price interactions, 1, 2, 3, right? And then the stop loss would have been naturally over here. In that case, the problem would have been that the risk reward ratio would not have been attractive at all. If we remove this over here, right, and if we said that this was our entry point, based on the discussion that we just did, right? This was having a massive 10% stop loss, and then the target could not be more than the 100 EMA 15%. So this wouldn't anyways qualify as a legitimate or a proper trade setup because the risk reward ratio is less than 3. So what do we do now? Right now, though this is a positive divergence, but it's not a very strong positive divergence because firstly, it is occurring within a bear trend. So the positive divergence did give us some positive price activity, but it fizzled out very quickly. Now, a price activity this short, like just 2 days, within 2 days, the stock achieved target. This kind of price activity is very difficult to capture. So we will not put that kind of pressure on our self. So what I'll do is I'm going to delete this and I'm going to delete this. So KPIT also, I think we will now keep aside from our analysis, right? So no trade was taken here either. So these 3 stocks I wanted to discuss, but I no longer want to do that. We did not analyze, and price setup has changed a lot since I decided I want to discuss those. We will move on with the stocks that we have for today. So I have shortlisted 8 stocks that I want to trade in for the next 1 week or 2 weeks maybe. But I will look for entry opportunities in these stocks in the weeks to come. Now, why is that? So this is the weekly time frame. Let's first remove all the drawings and do a fresh analysis. So this is the stock of Castrol. Now, before I get into stock by stock analysis, how did I shortlist these 8 stocks? So the first thing that I did was I have been studying so this is my RSQM model. So this model comprises of around 200 stocks from various indices like momentum index, quality index, so on and so forth. And out of all of these 200 stocks, I only study those stocks. Now it's glitching a little bit right now because it's the weekend, and on weekend it doesn't perform really well. When the prices load here, what you will see is that these are the rankings and these are the price changes from a starting day, say the 11th of March, for example. So from 11th of March to 12th of March, what was the price change? And on 12th of March, what was the ranking of the stocks? Which means the stock with the least ranking or the first ranking, there seems to be a filter. So the stock that is number 1 is the stock that has moved the most. So if I say take this 1 week behind, you can take it as back as 13 working days, right? So the top most performing stock was IIFL, and you can see that it has stayed approximately up to that level itself. So from 4th March till date, if you see, the top most performing stock has been Chennai Petro. Why is this reference? Let's just copy paste this. This has been Chennai Petro, which has gone up 23% in a matter of just 1, 2, 3, 4, 5, 6, 7 trading days, right? The reason why I like to look at this is because then I can look at the top winners and I can assess them and see if there is an entry opportunity or not. I also like to look at the stocks which are green marked on this. Now, why are these green marked? The green marking here basically shows that the stocks have gone up in the ranking as well as in the absolute percentage movement. Only then they will be marked in green over here, right? So time and again I keep looking at these stocks. The idea is that if a stock is going up and if it has a strong set, there is a tendency that it might continue to move up forward. Now this is called the relative strength quant model. This has been prepared by me. It's very simplistic and its power actually lies in its simplicity, but it took a lot of effort. It took me 3 months to build this model with a lot of back testing, with a lot of trial and error. And to anybody who enrolls into my advanced swing trade training program, which is this expinvest.in/learn. So this is my live training workshop called the Advanced Swing Trade Training or the Advanced Technical Analysis Training. So if you're interested in learning how to do swing trading with me, the process, the relative strength quant model, risk management, trading psychology, position sizing, chart patterns, candlestick, different indicators, deep dive into RSI, divergences, and range shift analysis, how to do trade journaling, how to do past trade analysis to strengthen your game, learn from your mistakes, then follow real-time trades with me, and then, if you're eligible, join the inner circle, so on and so forth. So if you want a copy of this relative strength quant model, this is the way to go about it. You'll need to join my live training program, because that is where I give access to everybody. Not just access, you get your own copy of the model to use, right? So which you can continue to use even if you disassociate with me. So what this model is, how to maintain this model, how to use this model, everything will be taught. So this model is how I came up with a shortlist of these 8 stocks after assessing activity over weeks, right? Now, let's start with the analysis of Castrol India. Now, in Castrol India's weekly time frame, I can clearly see that there is a positive breakout above this level. This happened back in July 23. And despite of the breakout happening back in July 23, I can see that the price activity, price trend continues to remain pretty positive. So let's draw some trend lines here. So I'm going to join these two bottoms, and I can see this got breached over here. Let's copy paste that, and let's use the same slope trend line to draw more zones. Now the underlying trend is clearly bullish on the weekly time frame. This is very important to note, because within a bull trend, we want to look for opportunities to go long. Okay, so within a bull trend, it is currently undergoing a correction. What I'm interested in is whether this correction within a larger trend is over or not. So here are my observations on the daily time frame. On the daily time frame, there was a negative divergence and then the negative range, because level of 60 was not being crossed and price was constantly making lower lows. However, I would say since 4th of March, that is very recently, the stock has gone into positive territory or positive trend again. Why? Because it has established a higher high here, and in addition to that, it has also established or gone back into the bull range by breaking above the level of 60. So on the 4th of March, if you look at the volume activity turned very positive on the 6th of March. 6th of March was this very strong. So basically 6th of March is actually when the breakout happened. So the breakout happened with very high volumes, as we just observed. Now that is a lot of conviction. Typically, price has a tendency to give pullback after the breakout with low volumes. So let's go back to the volume, and we can clearly see the volume give a massive decline. So this decline is looking very attractive, and I would like to enter here. I see a pullback entry opportunity around this level of 225. So where we're doing the analysis, let's mark it with the price label. This entry point is around 225.5. So we will enter the name of the stock here, NSE Castrol India. By the way, if you want access to this list, this sheet, you can find that in the description box below, or you can join my Telegram channel where I will be posting the sheet to this again. If you want to join my Telegram channel, here's my channel, Trade with Kavita. This is what you should seek in the description, the link to my website and my Teams link. Trade with Kavita is the name. This many subscribers roughly, because the reason I'm telling you this is because there are lots of copycat channels and you don't want to fall in touch, get in touch with those scammers, right? So okay, so the spot prices, so this is going to be here. This is the entry price. The spot price is the LTP, which is the price right now. So as the days go by and the LTP changes, this move percentage is going to change, right? So let's go forward and assess what our stop loss is going to be here. So if we do get an entry here, if this gives us a pullback, so let's set an alert here. 100-day entry point. If we do get a entry alert here, I think I would like to keep a stop loss. Now for the stop loss, let's go down to the 75-minute time frame. This is supposed to be 75-minute, and this is supposed to be 15-minute. Let's just, okay. this chart. Sorry, I like my layout to be in a certain way, and sometimes it gets moved while I'm working. I like to put it back in order immediately. Okay, so on the 75-minute time frame, we are seeing a little bit more definition on the prices. And what I want to know is that this wave, this latest wave, where it has the bottom, because if this low gets breached, then it means the price has officially forged a lower low. Therefore, it means the structure of the trend has been compromised. So the decision, so our trading, we are basically trading on the 75-minute time frame primarily, but we are ensuring that the daily and the weekly time frames are in alignment. Now, because we are trading the 75-minute time frame, I also want to put an alert on the RSI of the 75-minute time frame at the closest low and call it 100-day RSI support level, so that I know that we've discussed this stock and this alert in this video. Okay, so the stop loss that we have decided is 210.6. So I'm going to enter that here, 210.6, and there you go. Next, we need to set the target. Now remember, this will only qualify as a legitimate trade opportunity if the risk reward ratio is more than 3, but we are not going to dictate our desired target level on the basis of that requirement. We are going to assess the quality of the trade setup on the basis of the legitimate target. So over here, from what I can see the EMAs are all crossed. So there is a trend line resistance right here, but I would like to actually adjust this trend line. So first, keep it here, this one, right? Because this makes more sense to me because of 1, 2, 3, primarily these 3 points. And I would like to clone this trend line again by pressing the control or the command key and place this next trend line here because of resistances that I can see over here, internally. Once it got broken out here, there was a massive movement, and then I think over here, and then this kind of crawled across this entire sloping trend line resistance. So if this does act as the support that we think it will, and it bounces up, I would expect it to go up at least till this key trend line. Right now, why this key trend line? Because I also see the previous high. Now I'm going to be a little conservative and I'm going to move this lower to match this high, right? So let's assess the price setup now. So if this is the entry, this is the stop loss, and this is the target, the risk reward ratio is 3.7, which does make it a legitimate trade setup for us to pursue. So 283.3. So 283.3. Now, because the overall market is so negative, do I want to set up a GTT order here, or do I want to wait for this price to come, get tested, and move up? I think what I'm going to do is I'm going to set up a GTT order here. So if this price comes, the entry will automatically get executed. Over here, I want to take note of that. GTT set. So I'm going to write this here. When the buy GTT gets triggered, I will update the entry right here, right? So this is the trade setup in Castrol India, and I've shared the analysis with you. Now let's move on to the next stock, that is BHARTI Airtel. Now in BHARTI Airtel, there has been a major news. I don't know if you caught up to that or not. But from what I read, BHARTI Airtel is going to be the segue for Starlink to come to India, is providing the segue for Starlink to come to India. I think that is an immensely massive opportunity for this company. And let's look at the trend. So clearly the trend has been super bullish in BHARTI Airtel since this breakout right here. So this is where the major breakout came, and you will see there was a spike in price activity here, and there was a spike in price activity here, right? I hope you can see it. Yeah. So if I take a closer look, I can see as the price was moving up, there was immense price activity, right? However, when the actual breakout, so the actual breakout was lower here, which is basically this price action. So the price breakout did happen with strong volume participation. However, on the daily time frame, there was a negative divergence that unfolded, and then the price went back into correction up to the previous support level and then started to rally again. Then when it started to rally here, it again rallied with volume, good amount of volume pickup up to the point here where it again made a negative divergence. The reason I always start from a little bit behind or the beginning of a major uptrend or a major breakout is because it helps me get familiar with the personality of the stock. And I really want to know that. I'm interested in that because it helps me understand the ongoing price activity better. So I can see there was a negative divergence that got forged, and the price again pulled back to the level of the breakout, almost, not entirely, or it pulled back to the 250 EMA where it took support. But the positive range which has been established was respected because the RSI did not breach below the level of 40. And in fact, every time it approached the level of 40, it became a very attractive entry point, because after that the prices rallied. So again, here you will see after the rally ended, or rather when the price peaked out, again the RSI created a negative divergence, and here onward, after creating the negative divergence, it went into negative range for a while. It also created a double top formation here, right? The price again went to correct. It broke the 250 EMA twice here. It also slightly breached the level of 30. Now, did that hold any significance? We'll get to know in a while. So it continued upward, but it more or less stayed in the positive range. Now, so this was a major correction, and then it continued to rally upward, continued to respect the positive range. Here again, so this price activity that we are seeing is very similar to this price activity, right? So I think Bharti Airtel may actually gives a more attractive entry opportunity by correcting a little bit more and coming down to the 250 EMA. Right now it is somewhere over here, so it's taken a support at the 100 EMA and started to kind of go up. So we'll look out for two things: either it breaks out above the all-time high, or it comes back down to the 250 EMA to take support. So let's set an alert on that. Let's just write a shorthand 100-day analysis series. So we're still in the positive broad range, but intermittent correction. Now, given the history of the stock, we would expect the 250 EMA. Now, okay, another thing is that you see within this correction also, it did not really breach the key low, right? It did not forge a new low. What that tells me is that to maintain the integrity of the underlying uptrend, potentially a more attractive entry zone would be closer to the current most recent low, which in our case here would be this zone, right here. So this becomes a very attractive entry zone, which is also very close to the 250. So 1522.6. So NSE 15226. And the spot price is 1632. Now, what would be the stop loss? So we need stop loss because there is never any guarantee in the stock market, and there has to be a point where we come around and admit that, okay, what we assessed or expected did not turn out, we were wrong, so let's do damage control, let's protect the capital. So if the 250 EMA gets breached, right, that would be the first thing, the first warning, I would say. But also this uptrend, so the low of the final high, that is what we are choosing as the entry point. But if the previous uptrend's low also gets breached, basically this low gets breached, then I think that will be our tell that, you know, it's time to admit our mistake, which means that is the stop loss. Now, what about the target? How do we go about setting our target? I think for that purpose, I would like to use the trend line. How do I even draw a trend line on something that is so steep, right? Let's try. So we will take this major low, because before that there's a lot of consolidation. So this is the point of the breakout, major breakout, beginning of the new trend. But this is where the trend actually began, I think. So actually I am more comfortable taking this low because this is after the breakout, the first low. And then let's take this with a trend line drawing, right? That is also an act of a bit of trial and error. It doesn't come at once. You need to draw a few angles, draw a few lines, join few peaks and bottoms, and see which one makes the most intuitive sense. Now, the problem with this one is that while it does capture the broader trend very beautifully, it does no justice to the latest uptrend. But then again, the argument is that this latest uptrend has ended and gone into correction. So what we are basically trying to work with is indeed the broader uptrend. So maybe it's better to capture that. Now, if we do see an uptrend here, I would expect this to be the minimum target, right? This would be the first target, that is 1775. And beyond that, if the price does continue, then we might expect the level of 2010 also to get achieved. But that would be a little, I would say, optimistic for us. So we'll not go there yet. So the stop loss is around 4.3 and the target is around 16.5, making a risk reward ratio 3.42. So this also is a legitimate trade setup. So let's capture the stop loss 1446.3 and the target is 251.55. 251.55. Now you will see that the percentages are a lot different here than they were from what we saw there. That is simply because the targeting percentage is being calculated against the LTP, not against our potential entry price, which we are actually doing on the chart itself, right? So this is a legitimate, this is basically what we will look at. So let's set up our alerts. This is our 100-day series, 100-day analysis series, potential entry point. By the way, when these entry points get triggered, I will be sharing these trade setups with stop loss target in the Trade Together program. And over there, as the price activity unfolds, I will also be sharing trailing stop losses and allocation advice in real time. However, if you're following the 100 days analysis series, then here also you will get those updates, but only when I make the video and get time to post them, which means there might be a significant amount of lag there. So, you know, make your decision accordingly. If you want to join my Trade Together program, then again, just go to the website, go to services offered and choose short-term trading portfolio. It's called portfolio because here I will help you maintain 100% allocated portfolio if the market situation suits us. So if you want to join that, and if you want to do both, with me, if you want to learn and trade with me, then there is a plan for that as well, where you join the Trade Together program and you learn the advanced swing trade training program. So just opt for the learn and trade service there, right? So for today, let's end the discussion at these two stocks, because I know that my little daughter needs me. She's 3 months old. So I'm going to go attend to her now. And it's anyways been 38 minutes. I don't think a lot of you will have the caliber to follow through on any more of knowledge absorption beyond this point. So these are the two trade setups that we've discussed today. I will see you again very soon and hopefully be able to discuss the other stocks before they move. If not, then there's always going to be more stocks to analyze, more trade setups to assess, and we will work on those in the series. So thank you so much for joining me in this session. I will keep bringing more technical analysis and more swing trading ideas, analysis, and practical approach to you through this series. Thank you for joining in. Have a great week ahead.